All right. Good morning, good afternoon, good evening, everybody, wherever you're at in the world. This is Frank Speiser, your co-host of Metafide Spaces. With me, we have Matt Cross and Keyboard Yeti. Great to see everybody, old faces and new. And how's it going today, Matt?
Yo, how's everyone doing out there? Doing well myself. Just enjoying another summer day, working hard on Metafide, excited to get this out. Life's good right now.
Yeah, it's great. And if anybody missed it, which I'm sure you haven't, but the market ripped this weekend. It went from about 113 or so, or on Friday, and now we're at 117. 670. It got up around 123, and in typical crypto fashion, people are already acting like the sky's falling. That it's not at 123, but 117 compared to the previous all-time high of 112 is pretty good, and everybody should calm down because it's still going in the right direction. It's just it's kind of settling in its new channel. It's kind of funny though, right, Matt? Where if uh, if it's not going up all the time, constantly at ridiculous rates, you literally will have people start asking you like, "What's wrong with Bitcoin? What's wrong with crypto?" It's it's funny that the new high was set 2 days ago, and everybody's acting like the sky's falling this morning. Yeah,
Yeah, I agree. It's always cracks me up a little bit. Maybe it's just because people take irresponsible long positions and they end up getting closed out. I don't really know what it is, but this is the best performing asset in all of crypto right now. So
it's one of the best
nothing to
performing assets in all of finance. Anything, anywhere. Maybe Nvidia, is up there. I guess. It's but I mean, I think Bitcoin just reflipped Amazon again, so it's technically worth more as an asset than all of the stock of Amazon. So that's kind of a big deal. I think it's obviously it to me it's a small fraction of what it could be worth, considering the utility of uh, of holding a global store of value. But I mean, we'll get there. A couple different things about this cycle. Um, when BTC was at 112, we saw a bunch of smaller, holding, not small, smallish holding companies compared to MicroStrategy or Strategy, small. Um, and you saw them start buying in. So this kind of market went on a run with the support of some of the smaller ones deciding like, okay, we're about to hit a breakout period. Like we should just grab it. And then uh, MicroStrategy or Strategy bought 472.5 million BTC just as it hit 118, and that makes their total holdings over 600,000 BTC, which they bought at if you add it all up, it's about $43 billion that they've invested in the asset. So pretty good indicator, but the fact that it was led by the smaller ones this time kind of leads you to believe that the floor has got to be set higher, and the value that people place on crypto assets and the crypto market in general are probably higher. Also, do we make anything out of the case that ETH, had gone over 3,000 uh, in this last bump here? I mean, it's kind of settled. Oh no, it's actually up over 3,000 again. It just crossed over a little bit ago. Um, what do we make of that?
Well, I think there's, some room for ETH to still run. It's much smaller of a value than Bitcoin. Bitcoin's sitting at like a $2.5 trillion fully diluted value. ETH is around a 365. It still is a place where people are, launching these altcoins. It's still, a great underlying technology. The only flaw is that, the supply gets inflated ever so often, which ends up keeping the price down. But if they do decide to burn some ETH, as they bring new retail users in, there's a chance that we could see some more action on it. And
Yeah,
supposedly at con, I heard that there's going to be new developments in ETH over the next 7 months that's going to bring up the price.
Well, I mean, all the L2s, jumping in that have to eventually write back, right? Like there's something. If they would just stop kicking the legs out from under the developing market and support the actual projects, it would be helpful to sort of get some stability and some calm growth in ETH, which, instead of just minting a bunch more to whatever the hell this Workers of the World Unite shit that they're on, they could just keep ETH growing and grow the industry and then grow the people, building for these L2s. I think also, the last time that they considered doing this, I think the thought was that they were going to make ETH fast and scalable enough to support, native applications on the chain. And now they're just realizing like their network doesn't have the capacity. It's not sort of engineered for that. And so let that fall to the L2s. You can keep a lot of financial transfers and stuff on DEXs on ETH mainnet, but let's do some of the application stuff off of the mainnet and on an L2 so that you can get, cheaper gas and transaction fees, but you still have the, security regime of ETH, right? So that seems like it's at least more well understood this time around, and maybe it wasn't last time. So I would be happy to see them confirm that. But again, just like you, I'm a little skeptical that they won't just go out and mint a bunch more ETH to do some sort of price manipulation, which kind of kicked the whole DeFi industry in the gonads last time around. And I don't think we need that. So that's my hope that they'll manage it responsibly this time. And by responsibly, I mean make it supportive to people developing on ETH so that it's worth their while, right? So anything on there?
Yeah,
All
supposedly.
right, Yeti. I know you're
Vitalik
big in. You're
price.
big. What's that?
I said supposedly Vitalik doesn't care about the price.
Yeah. Well,
and I think people have been really requesting it now, so he might do a little something coming up. But that's just.
Oh, we lost you there, Matt. Sorry, you fell off. Yeti.
Yo.
How's it going today, brother?
Yeah, really good. You know what today is?
Is it your
Happy
birthday?
Oh, it's my birthday!
Yeah, man. Happy birthday.
Oh, thanks. You shouldn't have.
You beat me to it, man. Like, I just wished you happy birthday in Slack. It's not like I didn't know. But yeah, I mean, you're tied into the DeFi community really tightly. I mean, where do you see ETH taking this? Like, do you think they're gonna make another push to try to become the default DeFi token and where everything happens, or do you think they're willing to let it roll out to the L2s this time around?
Well, I mean, they're definitely they've got the utility kind of aspect of the DeFi stuff, but as you say, every time it gets some legs, they go and mint a whole bunch of new tokens and sell them out from under it. So it's kind of hard to say. I mean, it kind of depends on whether Vitalik's got a new girlfriend quite often, I think.
Oh, no. Well, yeah. So I think.
I reckon you could chart that as a thing, and I reckon someone should do that, like the single Vitalik versus the Vitalik with a girlfriend. I reckon there's some strong correlation there.
Oh man! So if somebody does find that and finds a correlation, I'll be willing to give a fine bounty for somebody that figures that out. So if you're out there and you're a data scientist just roaming the countryside looking for a project that's probably an irresponsible use of your time, go ahead and do that, and we'll see that you're rewarded handsomely. So today's topic, the science of forecasting, round two. It's a sort of a continuation from how we were talking about before, and I think first maybe we should refresh everybody. So the way you have technical price forecasting, and you have sort of the softer side of things, right? Like you can group it up into sentiment analysis, and you could do things like you're trying to take the temperature of the market. I don't like giving it one name because there's a bunch of different methods in there. But if we're going to break it up for this conversation, there's technical forecasting and then non-technical forecasting, which includes all that other stuff, right? But the thing is, I don't think you can arrive at a logical, viable prediction unless you have a way to combine both of those two things. And the way we try to do things here at Metafide is understand where the technicals would lead us if it were an efficient market that was basically an arms race among really efficient bots trained to optimize the yield of the market. However, that ain't the way crypto works, right? It's not even the way Wall Street works, because you have people that are self-motivated, that are, setting up dummy positions, decoy positions, and pumping up certain assets and devaluing others in the game, in the sport of trying to acquire or subvert other companies. There's a bunch of different market reasons why things don't just follow the technical patterns. A lot of times people just get scared and sell, or they get really way out of whack and start buying where it doesn't make sense to buy, but they're still buying. And we've all seen both of those things. But the way we try to look at it is we use a bunch of different AI models, neural networks mostly, to predict time series. And so it's like you read in a time series of bid, ask, bid volume, ask volume, the price line movement, the size of the transactions, the size of the potential transactions. And what you're trying to do is figure out, okay, given all this information, which model is going to forecast the next 1 minute, the next 1 second, the next 5 minutes. And you're trying to figure out which way it's going if left to logical outputs. And then what you want to do is try to measure the subjective piece as best you can. And a lot of people go on, they try to sift through Twitter or X, or they try to read through Reddit and try to figure out stuff going on Telegram and forums and in Discord. And for meme tokens, maybe you could do it because you can catch a coordinated pump or coordinated dump coming. But for big, viable, distributed assets, it's less likely that 50 Discord users are going to be able to move the price of Bitcoin or ETH or Doge, or it's one of the larger tokens, right? So what you want to do is you want to try to understand generally where do the people who are best at figuring it out think it's going to go. And that's where we come in, where we've introduced a series of games to augment the AI piece of it. And that's why it's so important when people, it's not just an add-on, it's critically instrumental to being able to predict the near-term price movement of something. Because if you don't have the people signal, you don't have the stuff that's not present in the technical models. And if you don't have a way to marry the two efficiently, you're never actually going to be able to make reasonably accurate, viable predictions over a long term. So what we've done is we have Surge. Surge has a spot game, it has a range game. And the idea is you can set up a range and understand, just about where the range are. Certain players are like our research shows that it's somewhere between 1.7 and 2.1% of the wallets that play can consistently outperform the AI range or AI line for a price in any given interval, and can do it more than 70% of the time in a 12-minute interval. So that's kind of the thresholds we're using. And then what we do is we take that stuff and say, okay, if you're high on the range, and we know the spot price is reasonably predictive with a high degree, with a fairly high degree of confidence, then that's a sell opportunity. And if it's low on the range and we know where the price is moving, then we have a low on the range, that's a buy. And what you want to do is stay in that channel, use people to predict breakouts, reset the new normal, that feeds the models, and then you just keep running the same play over and over. And I think that's the most transparent we've been about what we're doing. I'll give you a hint, though. If you're trying to copy it, it's way harder than I just made it sound, because we're crunching predictions on our side about every 3 seconds. And we're running the games every 1 minute for the spot and every 5 minute for the range. And we're going to be in market. I guess here's some more alpha. Maybe I'm giving up too much, but we're going to be doing 1 minute spot, 5 minute spot, 60-minute spot, and 1 day spot on stuff. So that's brand new information that we haven't said anywhere. We didn't even say it in the Discord or to our Spec Ops group or Alpha Test there. So that's a brand new announcement here. And we're not just going to be doing it with crypto assets. We're going to be doing it with other assets. We're going to launch with BTC and likely NVIDIA stock predictions when the game goes live in beta. And then once we get critical mass, we're going to roll out to probably Tesla next, and then probably something like Apple or Amazon or Facebook, Microsoft, something like that, right? So we have the plan all set. There you go. I've given up our roadmap already, but we're ready to go, and we have it all baked. So I'm super excited about that. And I know we have a lot of questions about how more of the science of forecasting works, but let me pause there. And I know you've been dealing with a lot of questions on the community side, Yeti. So are there any that have popped up that we should address right here before we move on to the next piece?
I guess so. So nothing specific, but I guess people would want to know, like, what makes a good. So you've described what, like, the Metafide engine an accurate forecaster, but what makes an individual user an accurate forecaster in the game? Do you think? What are they drawing on to make their accurate predictions? So that few percent that consistently beats the AI models.
So, as an individual, learning the asset and what it does in these small intervals is possible. Matt and I have both noticed during the run up to this over the past couple months as we've been testing, you kind of develop a relationship with the asset, and you start to anticipate, like, okay, if it bumps like this and bounces a couple times, here's what's likely to happen. And those patterns aren't always reflected in the technical analysis because they don't get right now. Actually, I think the technical analysis is mainly centered around the concept of analyzing candles and sort of aggregated or sampled positions. But people are pretty good at following the time series of something and starting to understand, like, how things bounce around. That piece isn't properly represented in any models that I'm aware of because people are infatuated with candles in this space. I mean, they're also infatuated with candles on the Wall Street side, but it's just because it's so difficult to do as a person to sort of measure every tick. But when you graph it and make a sport out of it, like we have, and you can play it like a game, you can get much more closely associated with the way the asset moves and what people are trying in the market to do when it hits certain near-term local maxes or mins, that people are very good at intuiting where the next point's going to show up once they see those patterns. And in some cases, they're more accurate than the machines are at picking them, at least for right now. So we like to combine those two. And I don't know that it was available at this degree until we made these games. Like, I don't think anybody's ever reflected financial data in a way like this, where we've essentially, you take people are great at playing sports. They're great at playing, video games. And it's kind of what we've done is we made the sport of trading into like a viable competition, but at such an atomic level that you're using people's intuition to fill in gaps that the machines aren't necessarily set up to do. So hopefully that answers the question, right? Matt, anything to add to that? Because I know we've talked about this a lot. So
yeah, I just want to retouch on what you said, like the relationship that you form with the asset. What everyone does look at is candles. You don't really look at, where things are moving on a quick, second update basis. But when you start to look at like the 1 minute charts, you really understand where things bounce, where they're most likely to bottom out. You can even start to see, people's long positions almost get margin called, and you can see it drop off. And, you're like, oh, something is actually happening in the market. We see a big mover coming in. and then you really can understand and predict the volatility yourself, which it's important to have that human intuition, because we are still driving markets in some type of way. Like you said, it's not all done by larger AI models and mathematicians. There's real people and traders out there who want to get into the asset. I think this is an opportunity to make money off the volatility, and feel about having a relationship with these assets like you've never done before.
Yeah, and some people are surprisingly good at it. Some people are wildly, flagrantly irresponsible when they play the game, but some people are really good at it, to the point where, like, where is he? Is he on the call here? Yeah, so Brian out there, for some reason, he's really good at doing it. Like, he's he's so good at it that sometimes we have to tell him to back off when we're showing brand new people the game, because he's going to go in there and steal their cookies, and he'll just like take their money from them, because he's so good at figuring it out. But um, I can assure you, Brian is not a Wall Street trader. He's not somebody who's out there and is looking at 1 minute. He's not looking at 5 minute candles all day. I can assure you that that's not the case. But for some reason, he and Radio Frog here can beat the pants off of just about everybody that's playing the game when it gets real. So we want to harness the signal of those people and whatever their specific pattern recognition and intuition is, and integrate that with AI models to come up with a better way of navigating the market, building products. And sort of the difference that we take is that we want to build those products for the people who are already using our products. So if we build a great way to arb the market, it's only fair for us to turn around and offer those products back to the people who are already contributing the signal first. So they get rich first. They get paid first. It's a virtuous cycle, but it's one of the ones that I think is necessary. And instead of us just taking everything and running for the hills, I think it's a collaborative, global, always on AI experiment that we use the best signal to then offer the best products, to offer the best opportunities to people who are fueling these products, right? So that's kind of how it works. And if somebody were to ask you, well, what's this FI token about? Is it, is this a meme token or is it an AI token? Yeah, it's an AI utility token that literally goes into the production of the signal that we use in our AI models. And that's completely different from people saying, like, you win tokens by putting AI signal on a chain, or you compete for some meaningless token other than the fact that it's got some value because people have pumped it. Like, our token is tied to the value that the signal produces, and then it is used in the production of that signal. So as far as I know, there's nothing like what we're doing, and it's super exciting actually to be here because it's working. Like, when we see the data come in, we're always a little surprised when we look back over like the new tranche of users that come in and say, oh, like, wow, like, I thought that might have been a fluke, but it turns out, no, there is a certain number of people that are good at this. And that should also be sort of reassuring to people out there wondering how much they're going to get replaced by AI. Maybe some of the stuff you're doing is, but humans are still really good at some stuff. And eventually they're going to arb that away from you too. But the idea is we can build a world where, we progress people through these transitions and come out the other side to get people taken care of while they're going through the transition too. And I think that's another piece that we believe pretty strongly in, is that if we're going to be leading people over the hill on this charge of AI, like, we want to make sure that we open up opportunities along the way and make a bigger pot at the end of this, not compete for some sort of zero-sum game that keeps getting smaller as people are extracting from it. So, yeah. I forget anything, Matt? Anything to add?
No, I think you have been showing off a pretty good understanding of this, and there's a lot of opportunity there. Again, on the pattern recognition, some people's brains just have a better ability to do that. They can feel things out, and I want to make this joke about vibe coding. It's a little bit of vibe trading going on over here too, or line vibing.
Yeah. I mean, whatever it is like some human brains are good at it, and it can be learned, I think, because we've seen people get better as they've played. Ace out there, Ace was crashing and burning when he first showed up in the game, and now all of a sudden he's one of the best players. So, when he's out there, I see, I've seen Jetso do well. I've seen Real Moji do well. I'm sorry if I leave you out and you've been crushing it. It's just because we've seen people improve their accuracy, and obviously in the beginning we didn't look too seriously into like when we were just messing around with the UI UX stuff and trying to figure out different ways to put it in front of people. But now we're sort of looking at the data and thinking, no, there's definitely something here. There's definitely a way to combine human intuition and near term, pattern recognition and improve AI models. Like that's something I'm certain of right now. And we just have to keep doing the research to quantify it. But as you quantify it, you can open up and figure out how much opportunities are worth. And then you could build market making, and you could build, staking pools and prop funds and ways to commit tokens to be able to like earn yield that wouldn't be available other places. All things we plan on doing. But, like I said, I've pretty much dropped the roadmap here so everybody can follow along as the project, is about to launch and understand that that's what we're going to do. And just keep opening up games to assets to get coverage to then keep building on to the way we're able to navigate the market, and then set up products like that will do market making, balancing, yield, that gets some value back to the users, all while we're burning tokens out of existence for each game. And our take on the games is always less than the amount of tokens we're burning. So even if we're able to sell tokens to new users based on our take, we're still burning more tokens out of existence than we take from a game. So it's always deflationary. And our success is in essence sort of tied to how much deflation we put into the system. So we think it's pretty elegant model, and it's fair for anyone that just wants to hold tokens and just sit on them and see what happens. You'll get rewarded too. Maybe not as much as people playing and winning, but just getting a piece of it and holding it, we think is worth something also because they're helping the value of everybody playing the game. So the only other thing I'll add to the science piece of the forecasting thing, because I know that was the topic, we use a couple machine models like off-label. So there's things like convolutional neural networks that are used in essentially facial recognition, image recognition, stuff like that, when you want to find two faces or three faces that look similarly. But we use it in a way where we take the time series of stuff, we make a bunch of graphs, we smash those graphs down and make it look like a bunch of squiggles on a piece of paper, essentially. And then we train the AI models. Is this up? Is this down? Is this up? Is this down in the next interval? And it's not looking at the numbers. It's looking kind of at the pictures as you might, and then trying to draw the next most probable picture in some cases. And we've gotten interesting ways of deploying the AI that's not just typical research stuff that you're seeing coming out of, papers of people doing researches at universities. We're kind of doing our own thing here too. And the plan is to become more creative and do some more novel scientific research around that stuff, which gives us a leg up in the market to do all sorts of other things. But the project's not just simply about the finance products. It's also about the novel and interesting use of AI that sort of we're bringing with us. So I'm getting kind of close to my time here. Anything else to add to this, Yeti?
No, I just on what you were saying earlier on, I don't have anything to add about the AI models. That's all way beyond me, way beyond my pay grade. But about the familiarity with the charts, like I've noticed it myself. Like when you're staring at them, playing those 1 minute games for an extended period of time, you do just start to get a feel for it, and your accuracy does become better and better. It's definitely like a learnt skill. It's something that everyone can improve on.
It's kind of like looking at one of those like posters on the wall, or if you stare at it long enough, like a pattern
magic
kind of comes
eyes.
out at you. Yeah. It's like you see people once they hit a certain threshold, they get good at it and they start getting better and better. And I'm super psyched for when we pile a bunch of people into these games to see, how people navigate both other people's positions and the market movements. So super psyched to be, in this position, being able to bring it to market with the community we've built. And I just want to say thanks to everybody for joining our space today. Join us on discord.gg/FIDE-token. Make sure you're in there because you get games, projects, contests. You get a chance to win FIDE, maybe the last chance coming up before the launch. So there's an announcement in there. Also follow us on YouTube at Metafide. Follow us on X at FIDE_AI. And we look forward to seeing everybody on Thursday at 4 p.m. Eastern time. So thanks, everybody. Have a good week, and we'll see you later. Take care. So the Surge game and platform is all about global human competition and refinement of AI models to predict near-term asset price movements. And instead of waiting for bids or asks to show up on exchanges, what we do is we combine the fast-paced gameplay of humans in a competitive environment, and then combine that with neural network predictions to make better positions in the market. Part of what makes that work is the tokenomics behind owning the FIDE AI token, as tokens are burned out of existence during each game, meaning they drive to compete for them. It ramps up as time goes on. But part of it is the math that we used in the payout calculation. And we built a model that works in any competitive market to reward the predictions, which are both precise and early. And the math incentivizes early competition in the game windows for the spot game, but rewards are much greater for that early precision. It's important to hedge in case the asset goes on a run or falls off a cliff, but generally speaking, the early bird gets the worm on the spot game. And your rewards are outsized when correct. It's the only place in the world right now where you can get fairly compensated for your alpha that you contribute. And so if you want to get involved, be sure to register on a pre-registration list. You get early access, amplified rewards. It's surge.metafide.io. That's surge.metafide, metafide.io. Surge.metafide.io. And I hope we get people in there, and I hope we get to see some new faces and people contributing to this, because it's a great experiment, and we've had a lot of success, and we can't wait to bring it to the rest of the world.